between the profile that I use and the Strat, so it kind of piqued my interest a little bit.
Perfect. So how did you get interested in learning, or how did you even come across the market footprint volume by profile and start using that as a tool in your trading?
Just YouTube. I was just, like I'm sure everyone does, you're searching for that one thing that's going to work for you. And at that point, which was maybe 3 years ago, I hadn't found it yet. And I started seeing this thing, which looked like nothing I've ever seen. It doesn't look like a candlestick chart. It's this completely foreign looking thing. And it just got me interested. And so I started researching it, and the concepts just resonated with me. They made a lot of sense. So I started pursuing that. I did all the study I could on it, and I told myself that, look, I really understand this. It makes sense to me. So I put all my effort into learning it the best I could and making that the way I trade.
All right, perfect. And how have you found that it's helped your trading? Like what's the main takeaway? And then we'll get into kind of reviewing market profile volume by price and what that is.
I think objectivity is probably the way it helped me the most, because it was intended to give an objective view of the market, to try and remove subjectivity, the way certain chart patterns could be subjective. Like, you can see a head and shoulders, or you can see whatever pattern that they use on candlestick charts, but they are subjective, and they're usually only true in hindsight, and a lot of times they fail.
Yes.
And I'm not saying that this is a perfect system, but it's given me that level of objectivity where I can say, okay, because of X, Y, and Z, this morning I'm either going to go short, or I'm not going to trade. And if I miss the long, I miss the long, because of the bias I'm able to develop based on objective things that I'm seeing in the profile. And because of that, it's also really helped me with my patience. I was probably one of the most impatient people you've ever met. Like at 9:30 in 1 second, I'm looking to hit the buy button.
I
And
hear ya. I get like that too.
and this has really helped me just sit back and let the trade come to me.
Yeah, perfect. And that's what it's all about, right? Like even the Strat's amazing. We all know that, but you can't take every Strat trade, because you need the right setup with the right Strat setup at the right time. So this has really helped you in that, it sounds like. So why don't you kind of jump into it? I know from the presentation I did last week, I'm sure people have a lot of questions on these sideways volume profiles, volume footprint, volume by price, and so forth. So if you can share your knowledge with us, that would be great.
Right. So I'm just going to start off by saying that I'm talking more about the market profile, which is a little bit different than the volume profile. But at the end of it was kind of a last minute change. At the end, I will talk about some of the ways that you can assimilate the knowledge from one to the other.
Perfect.
Okay. So just a brief, rundown here. As I said, I trade auction market principles, and I use the market profile as a tool to generate context, evaluate market condition, and stage of development. The stage of development just refers to, is the market in what's called balance, or is it in imbalance? And balance is just in simple terms, is a consolidation range. It's when
So equilibrium, kind of like Rob always talks about, right?
it's equilibrium, right? And I'm sure on a higher time frame, it would be inside of something.
Okay.
But like on a daily chart, I'm looking for a high and a low to be set, and then that high and low to hold for several days or weeks.
Okay.
And like a bouncy ball from high to low, that's an area of balance or consolidation.
Okay.
And you trade differently in those ranges. Your trade tactics are different in balance than imbalance. Imbalance is basically a trend. Imbalance
Gotcha.
is when you have the next day higher than the next, stair stepping up, up, and up. Okay,
Gotcha.
and it also helps me gauge participation, whether it's larger money or retail money, and situational psychology of the market participants. Is it a short squeeze, or longs getting afraid, things of that nature. And these all
Perfect.
go into helping me make trade decisions. As I said earlier, I've integrated the best of both worlds, because the methodologies are a little bit different. Some people are strict auction market traders. Some people are strict profile traders. I'm a hybrid of both.
Okay.
Okay, and just a quick rundown of what auction market principles are. Um, every financial market out there is an auction market. It's like an art auction. You go to Sotheby's, you want to buy a piece of art, and they start the bidding at a certain price, and people bid up until there's only one bidder left. It's the same idea in an auction market. The only difference is that in a financial market, it's a two-way auction, where you sell a piece of art, it's a one-way auction up. In a financial market, the market auctions higher or lower in search of buyers or sellers or buyers. Okay, and that move will continue in that direction until either the sellers or buyers exhaust. And when they exhaust, that's the completed auction. Then a new auction begins in the opposite direction, and that cycle just repeats over and over and over again.
So
And
it's very repeatable. It sounds like, just like the
yes,
strat patterns are.
very repeatable. Yeah, it's repeatable, and then
Does it help you determine where stops might be too, by looking
yes,
at where the market makers, because that's our problem, right? You get in a trade, and then you get a market maker that triangles you out. You're right, and then depending on how steep that market maker takes it, you're out of a trade. So
it does help. What I will say is there is a way to kind of determine whether a certain move was just a stop run, or if it's a bigger move in that direction. It's a little bit outside the scope of this presentation, but
sure.
those that really decide to take this up, there are ways to see that information happening in real time.
Wow, that's amazing.
And one of the trades I actually have in a later slide, it was a stop run where I got long, and I wrote it for a nice gain, and it's one of the slides that are coming up later.
Perfect.
Okay, so these rotations that I just spoke about, that's the price discovery process used by markets in search of fair value, and it also helps to explain how a market works. And the way I explain it to people that are asking, well, what exactly is auction market principles? It's a lens, and I try to view every market through this lens of auction market principles, and it helps me see activity in a slightly different way and more advantageous, I believe.
Perfect.
Okay. Now, what is a market profile? The profile is from the way I use it, it's a decision support tool, and it's used to organize data in real time. It's based on the 30-minute time frame, and it's a graphic representation of market participant opinions. It shows how much time a market spends at a given price. See, the candlestick charts, they only incorporate price and volume. The market profile incorporates price, volume, and time. And I have time highlighted because time is like the X factor in the market profile. Was the more time that is spent at price determines fair value. And fair value is an area of rotation, which we'll get into a little bit later. It's an area where the most business is done. And that's information for you, because that's information that tells you where you don't want to be trading. Where the fairest value is where you don't want to be trading. Those are usually chop zones.
Gotcha.
Okay.
Yeah, and none of us like that. We want to get in trades and we want it to go.
Yeah. Now there are people that make a living just scalping the chop zones, and that's perfectly fine if that's your personality and you're a fast. The profile makes you think about yourself and your own psychology, and are you a fast or a slow trader? And that's not apropos today, but are you a fast or a slow trader? Fast traders are scalpers. They'll take 5-10 trades a day. They'll scalp 2-3 point moves. Slower traders like I am, I prefer to see a move set up, get in, ride it for 10 or 15 points with smaller size.
Sure.
Scalpers use bigger size, scalp the move in or out.
Gotcha.
The profile is constructed of little things called TPOs, and depends what you read or who you talk to. TPO could stand for either time, price, opportunities, or that price occurred. And these TPOs, they move vertically for every tick up or down in price. And over the course of the day, they build out what's a bell-shaped curve on the profile for each trading session. So if you're not familiar with the standard deviation, it's a curve that kind of has the majority in the middle, and then it goes like this.
A bell curve, right?
Yes, it's a bell curve, exactly. But a profile is a bell curve turned on its end, so it's kind of standing up.
Oh, okay, makes sense.
Yep. And what I call it is looking under the hood of the market. You know, you're able to see nuances and occurrences that you generally aren't able to see on a regular candlestick chart.
So Ant, this gives you an edge then when you're trading.
I think it does.
For
I
you
find
personally.
for me personally, yes, and I think that it can give most people an edge that really commit to it and that really resonate with it. But some people will look at it and will just never get it, and that's just their psychology, and that's totally fine. But everyone has their own unique style, and you need to, you know, figure out what that is when you get into trading.
Absolutely right. And I think that's one of the biggest struggles all of us have, right? Like what is our edge and what makes our trading style unique and repeatable so that we can be consistently profitable, right?
Exactly. Yep. And that took me longer than I thought it would, but I'm just happy that I found it.
Yeah, it's true for all of us, I think.
Yep. So this next slide here, this is just a candlestick chart on a 30-minute time frame and a market profile chart on a 30 of the same day, just to show what they look like. So you can see this is this first green candle here. If you can see my mouse, this is the day that we're referencing. And if you follow, this is the profile here, and you can see how it's like a sideways bell curve.
Yes.
This is where it's collapsed. This is called a collapse profile. And then
Okay.
if you split it out, you can see each period for for the action that it made, and
Okay.
you can see when it's split out how it resembles the 30-minute chart.
Oh yeah. Yeah, I do see that.
Yeah, you can see almost how it resembles.
What
But
stock is that in?
oh, this is the S&P E-mini, the ES.
Okay, perfect.
Yeah, and that's one of the main things I trade is the S&P E-mini. But you can just see side by side how they look the same, but the information that you can gather from looking at this is far more, detailed than what you can get just from reading this, in my opinion.
Sure, makes sense.
And these little letters here are what are the TPOs. Each letter is a TPO. And the lettering isn't important. You could use any letter you want, any shape you want. I just have it in alphabetical order, so I know that A is 9:30, and B is 10, and C is 10:30, and so forth. It just makes sense to me and my my linear left-brained head. So we're
Sure.
going to go on to this, the similarities and parallels that I've noticed studying the Strat and comparing it back to the way I trade using the profile.
Okay.
And in one column here, I have the Strat, and then in the other column, I have the profile. And for the broadening formations, I find similarities with the balance areas, the candle types, like the 1, 2, 3 candles, inside and outside bars, which is basically what a 1 and a 3 are, but the way they're used is how I found the similarity. Hammers and shooters, I found very analogous to what's called excess and poor highs and lows, which I'll discuss briefly when we get to that slide.
So cool. So the things you're going to talk about here, whether we have the market profile or not, it's going to give us some insight to what's going on with those candles, it sounds like.
Yes, it gives you not just the candle itself, but also the bigger picture for maybe that day. It gives you perspective, and it helps you determine what's the higher odds trade. Is the higher odds to be long here or to be short here? Or is there more risk going long or more risk going short?
Fantastic.
Okay. The way Rob talks about gap dissemination and the 30-60 gappers,
Yes.
I find that, the gap rules and the way the open is viewed in the profile, I see some similarities there. Time frame continuity and top-down analysis. And then finally, the concept of control and visual mechanical levels, I find there's some crossover that can be very useful. So the first one that I'm going to talk about is the broadening formations and balance areas. And I don't know how well you can see my slide here, but what I have here is the daily chart of the Aussie dollar. And on this side, I have here a broadening formation drawn.
Hey,
And
Ant, can you put at the bottom of your screen, can you put in full
oh
screen
yeah,
mode?
let me do it like this maybe.
Then it'll be bigger and people can see it.
Are you seeing that?
Yeah, what it did is you got to slide that part to a different screen.
Ah, all right.
You know what I mean? Just so, or make it a full screen, just because then people can see.
Yeah, let me try and make that full screen somehow. It's
If it doesn't work, don't worry about it. I don't want to interrupt your flow, but
I'm doing the full screen, but it's going on a different screen of mine. It's going on my other screen.
is
I
it
don't know
all
how,
right?
yeah.
Don't worry about it then. Let's just keep rolling with it.
Okay. Yeah. So here we have, this is the, if I can make it a little bigger, that way you can see it, since I have it in this view here.
Yeah, that's good.
Yeah. Here we have the 6A, which is the Aussie dollar futures, and I have a broadening formation drawn on it. And on this one here, it's the same exact chart, only I have a balance area drawn the way I would draw it using the style that I trade. And what I have highlighted is what I call an upper reference area, a lower reference area, and a high volume node, which is similar to what you'd have on a volume profile. And the way that this is traded is you're looking for the move that's fueled by bigger money. Since only big money has the ability to move a market, you're looking for the break above here, which is called an initiative trade to the upside, or you're looking for the break below, which is an initiative trade to the downside. And the reason why I see a similarity is because you can see two different trading styles, but the same net result.
Gotcha.
You can see how this broke above the triangle, held the triangle as support and took off. And this was the same idea. This broke above the high of the balance area, came up, pulled back, retested, which is called acceptance in profile terminology, and then took off. So you have the same exact trade with the same result and two different styles of trading. So that's one of the ways I see the similarities in using these two.
Okay.
Okay. And I just noted here, you have the initiative trade and the responsive trade. This here is what's called an initiative trade. It's initiative because you have big money initiating new positions. A move like this can only happen through big money.
Right.
You know, us retail people can't do this. What the retail traders will be trading is the responsive trade, which is the trade off. It comes into this red area, you short it. It comes to the green, you go long. You go short, you go long until it doesn't work anymore.
Gotcha. And that's always what we want to do, is follow the institutional money. If you try to fight it, that's where you get screwed. So
exactly. And one thing that I do, I will take these responsive trades, but I take them with smaller size, just to put a little bit of money in the bank, and then I wait to hit these with size.
Okay. So back to the broadening formation for people that are using those.
Mm-hmm.
According to the Strat, you can see the same type of pattern. So when it hits the bottom of that range, as like Rob always talks about, you expect it to ride back up and so forth.
Right.
Very cool.
Okay. The next similarity that I find, and it's something that I use in my trading every day, are their candle types with the inside-outside bars. And I just included this graphic of the different candle types here that the Strat uses.
Yep.
But I'm going to try and make this image here a little bit larger, so maybe you can see a little bit better. In here, and these are trades that I've taken, I actually took this J period trade. You can see how J is an inside bar.
Okay.
How J is inside to I. And this day was actually, this was the stop run I was talking about earlier. This day was kind of holding this range all day. It was a very range-bound day. I believe this was last week. And then price was, grinding lower all day, finally broke lower day, and it looked like the sky was falling. People were, starting to get out. But watching the way the profile formed, looking at the volume on the side here, to me, I saw a stop run. So when J period opened and it couldn't take out the low of I got long, and I was able to ride most of this up.
And that's kind of equivalent to, again, 30-minute candles.
Exactly. Each period is a 30-minute candle. So what you effectively have here is a 2-1-2.
Okay, gotcha.
And that was probably the very first thing I noticed, is that I said to myself, I take these trades all the time, and then I'm looking at the 2-1-2. I'm like, it's the same damn thing.
Yeah, I can see that.
So that's when I started, digging more into the similarities. And you have the same thing here in G period.
Okay.
You have G period is inside of F, and you have a 2-1. You have a 2-1-2 down.
Okay.
So that's really the only thing about these two here. That's, you know, the inside bars and the outside bars too are part of my strategy. I look for inside bars and outside bars. Was when I learned the profile, I learned that outside bars were considered reversal bars. You know, if something goes outside, tries to go one way and fails, it's most likely going to go the other way, which is kind of like the 1-bar ref strat.
Ah, okay. That's very helpful. Say that one more time, just because I think that was a key point.
When I learned the profile, what I learned is that, you know, you have the inside bars, which I take trades off of, and you have an outside bar, which will just pretend that M went higher than L for this example.
Sure.
What you have is the bar taking out one end here and then coming back through. So basically it failed back in. So the odds are very high that this is going to at least come back and test the low of the prior period, if not go lower, which is what M period did. Which is just like the 1-bar ref strat, where you have something that's like, you have a 1 candle, and then you have it try to go 2 to the upside, and then it fails and goes and then it goes down, becomes a 3.
Gotcha.
Which is actually which is actually one of my favorite strat setups is that 1-bar reversal.
Yes. It's a beauty.
Yeah. Okay. Hammer shooters and the XS poor high, poor low. I'm going to explain what that is, because it's probably a very foreign term to most people. In this example here on the left, if you can see the high of day right there,
Mm-hmm.
you have D and F period. Most technicians would call that a double top, and you would take that short, which is a very appropriate trade.
Right.
In the profile, that's called a poor high. Basically, what's going on in a poor high is you're getting traders trapped. You're getting chasers that are getting in, trying to thinking this is going to break out, and they're getting trapped, and they're getting stuck, and then that's part of what this move happens. If you follow the morning, every half hour it's higher. You have higher lows, lows. So it's starting to build that look like it's trending higher. Then you have D period making a higher high. So the definition of a trend is higher highs and higher lows for a trend up. So this period here, F, is where traders started getting in trouble. They started buying the market, as you can see with this higher volume here. They started buying the market thinking it's breaking out, and then they started losing steam. And H period, when it broke the low of day, that was the final get out for everyone, and that's when they liquidated.
Cool.
And that's the whole concept of when Rob teaches about hammers and shooters, being a combination of new selling and ill-timed shorts or ill-timed longs. This in a way is the same thing. These are ill-timed traders getting in the market.
Gotcha.
And this slide here, excess is nothing more than a fancy way of talking about a wick or a tail on a candle. So if you imagine a candlestick, this part here is the body, and this part down here.
A typical, move that we'd see, let's say market opens, stock comes down, we see a buyer or a hammer candle at the bottom. That's a typical sign that we'd get in. You're looking at the raw data kind of behind that candle is what you're.
Kinda, yeah, exactly. And if you can in your head imagine a candlestick, this part here, the purple, and the little bit down here, this is the body of the candle. Okay. And this little tail right here, the single letter M, this is the wick.
Okay.
Okay, and this two here, in this day, it was the first period, which is A. This is your wick, and then this is the body of the candle. So you have, this is a hammer, and this is a hammer. But because I'm looking at the profile, when the hammer formed is important. Like the hammer forming in M versus the hammer forming in A mean two different things on the profile, which is something that you're not going to know looking at the candlestick chart, on the daily chart. And it provides different context to how you would play for if you trade the overnight, which is this part here, or if you trade the next day, it's different context. You know,
Gotcha.
so how Rob talks about when things form is important. When things form here on the profile too is also very important contextually.
All right, cool.
Okay. Gap dissemination and gap rules. You know, how Rob talks about, you know, playing, especially for new stratters, the 30-60 gappers, looking for your actionable signals with timeframe continuity, understanding if there's control or conflict, and then applying the rev strats and setups. The way the profile teaches to play the open, you have, if you open on a gap, there are certain gap rules which tell you how to play the gap, which I find analogous to, you know, the way Rob teaches how to follow this here. And the open type and location are also important. You know, are we opening above yesterday's range, below yesterday's range, in yesterday's range? If it's in,
And Rob talks about that
yeah,
a lot. You know,
yeah,
I want to know about things taking out yesterday's highs. I want to know about things taking out
exactly.
yesterday's lows. So how could you relate that back to, because we've been gapping pretty much every day now, right? Like, I mean, it's unusual to find a stock that isn't. And I think for a lot of people, a lot of stratters, those gaps throw them off. How could they kind of use some of the information you know about gaps just to, you know, anticipate what may or may not happen? Be
Well,
some pointers.
well, the way I play gaps, I only look for gaps that break the prior high or low of day.
Okay,
If it's gapping and it's hovering inside the range of the prior day, I don't look at it. I like,
okay,
because I feel there's more volatility and there's more of a chance for a larger move, or even a gap fill if it opens above the high, the prior high on a gap up, or below the low on a gap down.
okay.
And it was some of
That's
the
helpful.
yeah, some of the gap rules that, you know, there's a bunch of rules, but one of them is go with all gaps that don't fill relatively quickly. It's a very vague generic rule, which just takes, you know, exposure and screen time and time on the market to really understand how to play it. That's why I don't really like talking about too much. But basically, you want to watch price action and see, are we strong? Are we weak? Say it's a gap up. Is the gap filling? Is it trying to fill? Is it having a hard time filling? Are we rev stratting, you know, into the gap? You know, is there potential for this to go higher? That's the way I would look at it, and maybe try to apply some of those rules. You know, what the profile teaches is that you should go with all gaps, whatever direction, up or down, that don't fill fairly quickly. But the one thing where it does fall short, it doesn't explain what fairly quickly is. That's kind of
Gotcha.
up to the trader to kind of disseminate what fairly quickly is to you. Is it one period? Is it 2 half-hour periods? You know, is it 5 minutes? You know, and another thing you look for is the half gap fill. You know, a lot of times gaps will fill 50% and then they'll reverse.
And so does that, in your opinion, mean the stock is stronger than it might otherwise be? What does that tell you then, if it only fills a gap halfway?
It tells you, it's either it tells you more that the sellers who are trying to sell it down weren't strong enough to do so, that there's more buying interest. That's how. So I would, if it comes to like a half gap fill, and you start to see the price action slowing down, or you start to see the 30 or 60 go inside, I would kind of be looking for a move out of that inside candle. Either way, to be honest, just to see which way it
Okay,
goes.
well, that's helpful.
Yeah. And the open type is also important. You know, how the stock opens. And Rob talks about the open being one of the universal truths of price action, which is, I put a lot of stock into the open price. If we open and just drive away from the open price, like a racehorse being shot out of a gate at a horse race, that's information that I like to carry forward. Those kind of days usually end up as trending days up. Those are the days that Rob talks about, the long red and green bars.
Okay,
So on days like that, if I don't have an opportunity to get in right at the open, I will look for something to go inside, or I'll look for some type of continuation pattern to get involved in the market that way. If it opens and just kind of rotates around the open price, to me, that's more of a chop scenario, and I'll stay away from those markets.
that makes sense. That makes sense. So back to, you know, which trades do we take, which do we stay away from? We want those that have the strong momentum and the movement out of the gate.
Right, yeah, you want, like Rob talks about, you want those long red and green bars, whether it's up or down. You want the first, you know, 15, 30, even 60 minutes to be a very long green or red bar. and then you want to look for an entry off of that, you know, whether it's a ref strat or a continuation pattern, whatever sets up based
Perfect.
on you know, the time frame continuity or whatever else you're looking at.
That's helpful. Thank you.
Okay, and then the next area that I did see some similarities has to do with my prep work going into a day of trading. Time frame continuity on the strat side and on the profile side is called top-down analysis. Top-down, it's basically a 30,000-foot view of what's going on in the market. You start every morning analysis with the month, then the week, then the day, and then you move on to a 30-minute or a profile. Excuse me, a profile. And that's very similar to the way Rob says minimum 4 charts, an hourly, a day, a week, and a month, to give you that bigger picture. And the reason why we do the top down is to determine, you know, bias. You want to determine which side of the market you're in control and trade with that side of the market. And in the profile, you're looking for things such as one-time framing, which I've included an example in this image here. I numbered the candles just to make the explanation easier. Candles 1, 2, 3, and 4 are one-time framing down, which means that the lows were taken out of each one, and the high of this candle could not take out the high of this candle. The high of this candle couldn't take out the high of number 2, and so on and so forth. So it's kind of stair-stepping downward.
Yes.
Okay.
And those kind of things are really important to notice, you know, the actual action of the candle and what it's doing. And I think when you're a newer trader, things seem to move so fast and it's hard even to get some of those basic concepts, you know.
Right.
You really see what price action's doing.
Right. And you know, the way we use time frame continuity to determine the way we want to trade a stock, if everything is green, you know, on the 60 daily, weekly, monthly, you're probably not going to want to short that. The same with this. If I saw this on the monthly and weekly, but the daily is in balance, I'm going to look for short breaks below balance. And I won't even look to go long because I have all this red on the higher time frames.
That's a really good point. That's like people that try to short Tesla when it's in one of those crazy runs. You know, you can't do that. And I think, again, for newer traders, all of us probably have made that mistake where we're like, oh, I'm so excited to short because things just fly down and I make all this money. And then you get into one of those situations where you're trying to short something that's really strong, and those are real scalping moves on the stronger stocks.
Right. There's nothing wrong with taking them if you're fast enough and you can scalp them. There's nothing wrong with taking them. You know, people that I've told this to have asked me, and they say, "Isn't having a bias bad?" And I say, "Well, it depends. It depends how your bias is. You know, if your bias is based on objective data, for me, it's easier. I just find that it's less information for my brain to process. I'm either going to go short or I'm going to do nothing."
Gotcha.
As opposed to being watchful for the short and the long, you know, and then having to think, well, if I go short, my odds are higher. If I go long, my odds are higher. So I've predetermined that my odds are higher going short that day.
And then you're waiting for that trade to come to you. And if it's not there, you don't trade it.
Exactly. And if it's not there, it's not there. And it's not the S&P isn't the only market I have up. I'll have up crude oil. I'll have up the Russell. I'll have up maybe 2 equities. I'll have up Apple and maybe a gapper, you know. So I'll have up multiple instruments. That way, you know, I'm looking for one thing, but I'm looking for that one thing. And that's what Rob says too, trade a condition, not a stock. So
not a stock, yeah.
So I'll have up, you know, 4 or 5 watches the most, and I will be looking for 1, maybe 2 conditions to trade.
And that's another really good point when it comes to trading for all of us, because Rob's got 9 million screens. I've got 3. I find I have a hard time watching even 3, right? So you're saying that you generally have 4 or so that you're concentrating on?
4 or 5 usually the max, yeah.
And that's probably one of the best things I would think newer traders could do too. Pick, you know, whether you're trading stock, option, pick 4 things that you really like to trade and get good at trading those first, and trade the conditions on them, you know, not the stock necessarily, and let that trade come to you. Is that kind of what you're saying, Ed?
Yeah. And of those 4 or 5, I always have a primary. I always know which one's my main watch.
Okay.
That way
And
I
you
know
base
that
criteria on what's your
on
favorite?
I will usually base that on either if I see something setting up, or if if we have a gapper that gaps something that ran up, 100%, and then it's gapping down 20. I know I have trap traders. I know that people are going to want to liquidate. So for that reason, that may be a top watch, because I know that I'm going to get a good short in that, or just, if there's a setup on the daily that's too good to pass up, a number of factors based on my analysis every morning. I will come down to one that's my main watch. And if there are days where I can't decide, I'll just focus on the market, the S&P mini or the Russell.
Okay, perfect. Thank you for those tips.
Mm-hmm. And then we have the last thing that I notice a couple similarities is the concept of control and visual mechanical levels on the profile. And the reactions to these levels help determine participants and therefore control, which is market profile theory. The profile theory breaks up traders into 2 types. You have the OTF, which is the other time frame, which are institutions. And they have a longer term outlook, bigger picture, weeks, months, years. This is the money that can move the markets. This is the money that you want to be behind. You want to, ride their coattails on a trending move. They're unaware of references. They have no idea what yesterday's high of day was. They have no idea what the point of control in the ES is. The levels, they're unaware of them, and they don't care. They're of no use to them, because they're working off a different agenda. They're working off an agenda that's a much bigger position and a much longer time frame. And what they trade with are what we know as big money tactics and psychology. Then we have the DTF, which is the day time frame, and that's mostly retail, which is us. The day time frame can be further divided into like really big account day time frame and smaller account, but that's outside the scope of this slide.
Sure.
But just what it's the shorter time frame outlook, intraday, days, week to weeks. Generally, this is money that is unable to move markets. However, if you get enough day time frame traders that have large enough accounts on a low volume day, they could move a market a little bit. Like maybe on a day before a holiday, if you have enough day time
Friday
frame
before
traders.
Thanksgiving or something like that.
Yeah, exactly. You get enough guys with multi-million dollar accounts that aren't institutions. I'm sure they could, and the volume is low where the OTF isn't really involved. There could be some movement back and forth. So and they're not hard and fast rules. They're just they're categorizations.
So this just kind of relates back to what Rob's always talking about. You need to look at those bigger time frames. You need to look at daily, but you got to know what's going on with weekly and monthly as well. And this is kind of giving us the backdrop for why that's so critical.
Right. And the next point, and the next point also is that the day time frame are highly aware of references. They're going to know where the prior day's high and low are. They're going to know where the point of control is. They're going to know where key levels are, because that's what they trade off of.
Okay. And then lastly, because I use the volume profile, which that's kind of how I see, and I know initially when I put it on my chart, it was after a conversation with you where you kind of talked about the volume profile showing voids in the market and where price may float up and down to.
That's the most, common way of using it, and probably the way it relates the most to the profile is that.
Do you have that, Ant? Do you have TradingView with the volume profile that you can throw up for people just so they can see it?
Yeah, I could pull that up.
Because it's something I've used and talked about, but you've got more knowledge than I do on that for sure.
Let me see.
And point of control too is something I use. I mean, whatever knowledge you've got there that you can share that give people more insight, that would be really helpful.
I don't need that turned on. All right, let me maximize this and throw on.
And for those people using volume profile, for those people using Trading View, it's just under volume profile on indicators and strategies. It's a Trading View indicator as far as I know, right, Ant?
Yeah, if under indicators, if you go to volume profile, it should be built in. The one I have on is session volume, but if you can play with the different settings. Like the visible range I like because you can actually pick the range that you put it on.
So when you put this up on your chart, talk to us a little bit about point of control and what you see there and what other traders in the room could do with this.
The two main things that you can do with this, you have the point of control, which is this red. I'll make it purple so it's easier to see. You have this purple line, which is the point of control, which is where the most volume was done for that day. And generally going forward into the next day, you can look at that as an area of potential support or resistance. You can see here how it was support in these periods here. You could have taken trades in these
Absolutely,
off of here, and the following day it rejected that area. So on a smaller time frame, you could have probably found an entry short. This is a 30-minute chart, and if you just look at all the profiles every day, you can kind of see how every half-hour period is kind of respects this area of high volume, and there's usually a trade to be had off these levels. So I wouldn't use it as my only variable, but if you use it as one of the variables that you have to take a trade, I think it's a very valuable way of looking at trades and adding a variable. So you have, say you have a ref strat and you have this and you have that, you can throw this in as well as another confirming variable.
Yeah, I use it as one of my criteria for actually getting into a trade. And what I've noticed, and you correct me if I'm wrong or fill in additional knowledge, but if we go, let's say, to this last example that's kind of blown up here, that you've got all these bars kind of sticking out further at the top and they whittle down towards the bottom. And so that leaves, if you start at the bottom where you have that big green engulfing candle to the upside, it's filling in that gap essentially, right? Like what I've noticed is that the stock tends to stay in the range that volume profile sets up. If I look at it with pre-market on, I've marked it out on my charts. Right. I've definitely seen it grow, but a lot of times it almost seems to set the day's range.
Right. And the other thing that you want to look at is areas of low volume. You have, see right here, it's like a little C shape.
Yes.
Generally, these areas tend to want to fill in, usually that same day or within a couple of days. The market always tries to maintain equilibrium. So any area of low volume is out of balance with the rest of the structure. So it tries to fill it in. So you can see what it did here. All these days here, it kept trying. And then finally here, where the gap up, it resolved this hole. Whenever you take something out, it's considered resolved.
Okay. So key takeaways from what you shared with us, this market footprint or what's going on behind the scenes kind of shows us why the strat works. We need to be looking at the longer time frames.
Longer time frames are very important. Knowing who your competition is, knowing yourself, of course, knowing your competition, and understanding what the bigger picture is in whatever you're trading.
Yes. And then with the volume profile can kind of give you potentially the range for the day and where the likely direction is, because just looking at this chart, I mean, you can see the strat setups out of the gate and kind of why they worked. I mean, this last one here, you got a 232 right overnight, and then it flies up and fills that gap to the upside. So it can give you some more confidence in taking those trades or when the right strat trades are. I've noticed by having it on my chart anyway, that there's certain strat trades I won't take now because maybe it's a long into that point of control that's acting as resistance, and there really isn't that gap for it to fill. So at times that'll make me hesitate to take that trade or keep me out of bad trades.
Right.
So those are things that I've noticed. And then the little dots are developing point of control, kind of candle to candle from how I've used it anyway.
Well, the white dots. Oh no, that's
Yeah.
that's the open price. That's the
Oh,
930
that's
open.
your open. Oh, okay. You
Yeah.
don't have the
No.
yeah, I have the developing point of control on my chart as well, just to see kind of what's going on with each candle. And that's helped as well, because if the point of control, that little dot, is above price, then it could act as resistance and indicate that price is going to come down, and
Right.
vice versa.
Exactly. Yeah. You know, and you, like I was showing back before with that Caterpillar example, you know, that's one of the things that actually someone that you and I know, Jerry, trades, you know, he looks for these voids, and if price gets too extended away from it, he looks for it to come back, and most of the time it does.
Yeah, it's really been a game changer for me. Thanks to you and Jerry, who both use it. But before we get into kind of specific setups for the week, does anyone have questions for Ant or on anything that we've covered so far? All right, I don't see anything yet. If you have questions, guys, just type them in chat. If not, we'll kind of go on to, and I know you said you had a few stock setups, did you say, or a few stocks you like for next week?
I had a couple. I mean, like, I don't know how well they really jive with the strat, but you know, I had a Zscaler I was looking at for a continuation higher. It's an inside day after.
On Trading View so
Oh
we
yeah,
can see the chart.
that's right. Yeah, I should have thought of that. Hang on.
It's all right.
Let me.
And I figure for participants in the room, go ahead and type in chat any stock that you would like to look at that you might have reviewed and said, hey, is this a good setup for next week? Because we'll kind of get into reviewing some of that right now.
Yeah.
So go ahead and type that in.
Yeah, Zscaler was in recent earnings play where they had really good earnings. So I had this big green day here. Then it went inside up near the highs. So, you know, with every time frame being green and this looking like big money getting in because of the positive earnings, I'm thinking that, you know, this may continue above this high here, 183.37. We may have a nice continuation move higher.
So you're looking at a break of the inside day on that one.
Yeah, to the upside.
Yeah, back to full time frame continuity.
Right, and we are above that triangle. If you pull out, I have a triangle, couple triangle lines drawn here. We are just above that.
Yeah, perfect. So anything, so really we'd be saying above 183.37.
Right.
That's a good trade to the long side.
Right.
What would be your target on that, Ant?
I first of all would be targeting this high of day here, which is 189.
Okay.
189.80, which is also a round whole number. So there's a very good chance you could go there. It's basically the 190.
Right. Yeah, that stocks tend to gravitate to the next whole number. I've definitely noticed that over the years.
Yeah.
So 183.37 would effectively be your entry, and 189.80 would be your target for that initial. Is this, I haven't traded Zscaler. Do you know anything? Are the options decent on it, or?
I don't know. I haven't traded the options on it.
Yeah, I haven't looked at them. I'll have to see. Can you do me a favor and throw up FSLY Fastly? And then we did get a quick question. Do you get into trades and out of trades with a 30-minute time frame? What do you personally do?
I try to get in, you know, on a 5 or a 3. I mean, you can, you know, if you're trading equity commons, you can just, you know, set a buy stop order and have it fill at that level. There's nothing wrong with that.
Yeah, and I agree with you. Like I trade options, so for option entries, tell me if you agree with this. I feel like you got to be quite a bit more picky, because if you get the wrong entry, you're going to get smashed and have to worry about time decay and all these things. So
it's difficult. Yeah, I agree with that. Like my trade on Friday was in DocuSign, off the open, and I kept bidding. I must have bid about 7 times for my options. I finally got filled.
Wow. Yeah, so that it makes a lot of difference whether you're trading stock or options.
Mm-hmm.
I think, because I agree with you, if you're trading just the stock, yeah, you could probably grab it off the 30-minute time frame. But Scott, you know, if you're trading the option, you're going to want to, what I personally do is I go down to a 1 or a 5-minute time frame and I wait for a triangle layout, and then I jump in on the option there after price is corrected, so that I know I'm getting a price on that option that's lower on the range.
Do you actually use the actual option chart, or do you just use the equity chart?
Do use the option chart as well. So on my broker, I've got the option chart up with, you know, all the different options for that stock, and the option chart has the stock chart above it. But I'll look at the option chart because, you know, generally speaking, the option price corresponds to the movement in the stock, but I have found times that that's not true.
Right. I've seen that too.
Right, where price is kind of going sideways, yet the option's moving up, and vice versa. So I think it's important for those of you that trade options to have that option pricing chart up as well, and a lower time frame.
And I'll throw this little tidbit in that actually Chris pointed out, that
Yeah.
if you're in an option and you notice that, you know, price is moving but the option really isn't, that's indication that price might be moving the other way and you may want to flip.
Yeah, no, that's not a bad point at all. I mean, options are so many nuances. That's a fantastic point.
It's not an always thing, but I've noticed that too. I've been in trades where I've noticed that and I flipped and it's actually worked in my favor. So it's just something I figured I'd mention.
That's a really, really good point. Thanks for bringing that up. Can you pull up FSLY on there? We looked at FSLY. So what I see in the chart is obviously on that, it looks like it's inside on the 30, right? So out of the gate, you can take, if there's a good setup out of the gate off that inside candle, that's definitely on a higher time frame, so a 30 or a 60, you can definitely take those trades out of the gate. That's what Rob has said. So what's the high of that inside candle? Is it inside or it's a 2? Okay,
it's a 2. Yeah, the high there is 89.68.
Gotcha. So if you had, let's say and it's hard for me to tell in the chart, is that close is just slightly lower than the one before. So yeah, that might not provide the best actionable signal unless it turns around and goes back down, right?
Right.
But what I'd be looking for with this one is for it to get back to full time frame continuity here. Obviously it's down on the quarter, but we know why. You know, if you look at the monthly, we'd like to see that 2 up continue and then take the magnitude of 140 out in an ideal world. What are your thoughts, Ant? Just looking at the chart volume profile, it looks like there's
no, this tail's got me concerned on the daily. You know, yeah, a little bit. I mean, that's more technical, but it just, you know, it's coming to a level. And
where is it on that gap? Pull the chart back just a little bit. So it tested that prior gap, right?
Yep, and it got rejected hard.
And then it smacked. So I guess that's one I would say on FSLY. There's a lot of magnitude back to the upside, but we kind of got to see how it opens tomorrow.
I mean, you know, the question is this triangle forming right here? That's what you got to ask yourself. You have that, and then you have this
broadening formation there.
Yeah.
On the daily. Yeah.
Yeah.
So it becomes a matter of, can it bust out through the broadening formation and then take the week and the month? And obviously when you look at the week, it's been 5 weeks green.
And you're outside this week.
Yes.
You tried to go lower and went up, so that's in your favor.
Yes. So I mean, tomorrow could even be, I don't know. I guess we'll just have to wait and see. But can you pull, someone asked about NSC?
Oh, Norfolk Railroads. So we got 3-1 daily. Nice. What would bring the week into?
Let's see, and we've got.
You get above the 3 candle, that puts the week green.
Yeah, and you've got a doji here on the monthly, but it's still in the upper.
It's in the upper, which I like. I like it in the, you know,
quadrant of that candle.
Yeah, the fact that it's in the, it's up at highs, you know, that to me that's a net positive.
Yeah, I agree. So 2 and 2 on the week, so we'd be looking for it to again hopefully jump back over that area.
Yeah, we were kind of hoping that it can take these guys out here.
And what number, what level would we need to be over, do you think, to, what's that number in your chart?
The way I would, you know, one way you can play this is if we get over yesterday's high, you can put it on a small position and then add when the week breaks.
Gotcha.
Because when the week
And
breaks,
that level was what, Dan?
the daily level is 240.38. The weekly to go green would be 242.23. So you break the weekly, there's a good chance this pivot machine gun's going to fire.
Yeah, and again, guys, pivot machine gun is when you see, so even a prettier looking pivot machine gun could be on the monthly. I mean, this isn't what we're looking for in this trade, but when we see all those green candles up, a pivot machine gun down would be to take all the green candles out. If you're looking at the monthly, up in the daily, what Ann's talking about is you've got several red candles to the downside, and you could pivot machine gun them back up if we're over that 240.38, I think it was on the daily.
Yeah, I just marked it at the daily, and the second level here, this would put the week green.
Well, and there's a perfect example of pivot machine gun on the 30-minute chart, right? Yeah. So it pivot machine gun down a little bit and then right back the other way, that last set of candles there, the last day.
Right.
It took all those stops out for people who got short. So as Rob would say, oh, you know, you think you're gonna take them out, do you? Or whatever it is that he says, all those little Robisms. But that's what pivot machine guns are, guys. When you've got a series of candles going in one strong direction and then they just get all taken out, all those stops get run back to
right here on snow.
Yeah,
snow's right there on snow. All these guys got pivot machine guns. They all got taken out.
One big shot. Yep. All right, so that's NSC. Now someone's asking about Dollar Tree, DLTR.
What do we have? 2-1, 3-1.
3-1, yeah.
Full time frame.
Continuity, yep.
Yeah. So we're thinking above here, above 113.48. Magnitude will be up here, I would assume.
118.
Well, 114 first, and then anything on the weekly. Yeah, 118-ish, 119, 118.
All right, so let's just repeat that so everybody's got it. So over Dollar Tree inside on the daily, so over 113.48.
Over 113.48, because we have everything, all other time frames green.
And then our magnitude would be up to that previous high, which was 118.94.
Yeah, I mean, you do have this little guy here, but I think if this gets going, this will get taken right out. I think the bigger magnitude is 118.94.
I would think so too. And then we've got that full time frame continuity going in our favor, so that could be a really nice trade. Yeah. Mm-hmm. Really good. That's a good one. All right, and then Kevin, this is a list of 1, 2 today and the daily. They go 2 up tomorrow. So look at Facebook.
Let me just get rid of these lines. Okay, Facebook, we got 2 down, but we're green.
Yeah, so they're 1-2 down on the daily.
Yeah.
And if they go 2 up tomorrow, and that's actually one of my favorite setups. When you've got a 1-2 down on the daily, I mean, you'll find 9 times out of 10 that next candle is up for what they call a, you know, a non-strat language, a morning star pattern, but it's fairly reliable. The only thing that's interesting to me about the daily on Facebook is you've got a 1. It's an interesting hammer there, but you know, with the high upper wick, but that can very well mean that we're at the bottom of the downtrend as well.
Right.
So that can be a real nice setup back to full time frame continuity. Thank you, Kevin, for that. So let's just get what we think the levels would be that you'd want to enter this trade and kind of what we're looking for. In an ideal world, back to our conversation earlier, we'd really like to see it maybe open on the higher end of that 2 down candle on the daily, right?
Yeah, somewhere up here maybe.
Yeah, that would be ideal. I mean, if it opened at that wick, it might even be better. And one thing I've noticed back to the idea of gaps, let's just say that it does gap up to 283.46. Typically, we find it's going to retrace a little bit, right, before it continues higher.
I would even say here.
$281.45.
Yeah, I like that intraday level.
Yeah, right off the 30-minute.
Yeah, I do like that pivot right there. That might be a nice place for this to, you know, open here, pull in, hold, you know, put in a nice little 2-1-2 or something here, a nice hammer, and then take off.
Gotcha. So what we might want to wait for is a pullback to 281.45.
Yeah, in and around that area. I'm just looking at how it lines up with the rest of the chart.
Right.
Yeah, it's a decent area. It's got a lot of interaction. It's almost this high. It's almost this pivot.
All right, cool. And so our target on that would be initially the 283, depending on where it opens, right? And then back up to the wick on that 1 candle and higher if it wants to. I mean, Facebook can really go, and it's, if you look at some of these setups prior where you've got the dip down, look at the big green candles the next day. So that could be really, really nice for tomorrow. Okay, and someone is asking, you always get options at the money. I do get at the money options, just because, you know, as a new trader, you look at them and you think, okay, they're so much more expensive. Why do I want to put my money into it? The reason that you want to buy at least at the money options is when price starts to move your way, those options are going to take off. If you're in out of the money options, you have to wait a lot longer and price has to move a lot farther for you to be in the money. And when you're in an options trade, your goal is to get in the money as quickly as possible because of time decay. So you're taking a huge risk. You've got to be an awfully skilled trader to trade out of the money options. I mean, you've got to know with almost 100% certainty, which in my opinion, none of us can know where that price is going to move. So for me, I'm just not comfortable, except in rare situations, taking out of money options. And any thoughts on that, Ann? Do you usually trade at the money options?
Most of the time, unless I have something like if I had seen this, I would have taken a flyer on something out of the money.
Gotcha.
You know, because I know the potential for that this thing has.
Well, you probably could see this pivot machine gun too. You know,
that's exactly what I saw. And this morning, I had things to take care of at work, and I just got tied up with that, and I didn't trade this day. But had I seen this, I honestly, if this thing opened here around 280, I would have taken like a 320. Yeah, I will look at least for this, you know, a 320 out of the money and see what happens.
Yeah, and there, you know, there's always differing schools of thought. Another Another idea is you could do a starter position, right, with an at the money option. If it keeps going, you can always add to that position with a couple out of the money because you've already made some money. So that's another thought.
Or you could just trade both. You know, people, I've done that too, where I've taken an at the money and I've taken one way out just in case.
Yeah.
No, you have to, you know, understand what your risk is and understand that, you know, how much you want to risk and how much of, if you're in profit, how much you want to give back on that lotto play essentially.
Right. Right. So that's a way to kind of play both ends of it. If you want to start out with that at the money, make sure that you're actually making some money. And then if this thing keeps going in your direction, wait for a triangle day out and take a couple out of the money options at magnitude in this case. So if we were looking at snow, right, what would that level be on this one, just to give an example?
From this day here, I would have been looking at 326-ish and then like 343. So you figure like the 325 and then the 340 calls. And something to touch on that, something that Rob always says too, is that if you want to, you can always trade equity. Once you're in profit, use house money to take an out of the money lotto play.
That's true too, absolutely. All right, next, somebody's asking about ENVA.
B is in boy or V is in Victor?
E is in Eddie, N is in Nancy, V is in Victor, A is in Apple.
212 full time frame. We got here 3. Try going. I guess we're looking long on this one, probably. In rate 212, but we have a 3 on the weekly.
Let's see here. That's one I've never traded before. And
Neither
that's
have I.
one, I don't know what the options are like, but that's one I'd probably just play the stock on.
This is one I would, yeah, just my gut's
Right?
telling me, my gut's telling me commons on this one.
Yeah, I would think so too. So if this is one you're gonna play, that's one that I would, so let's see. So there's a lot of magnitude on the monthly and the month's still young, right? There's a lot of potential upside here.
Yeah.
And then we have almost a small, you know, hammer up where it tried to go lower and didn't. So it looks fairly strong.
Mm-hmm.
Yep. Full time frame continuity, but yearly's down, but you know, I don't think we're overly worried about that because of the magnitude to the upside. So entry on that would be roughly what?
The 2270 area, maybe.
2270, and then our magnitude would be initially to 2290. But if we look at that weekly.
Weekly would go to 25. That's a big move. I can't
25.
see the ATR on this has to be what, like 1.5, maybe 2, 1.5.
Yeah, what is that? Let me pull it up here. Yeah, and that's something else to watch, guys. I don't know if you have ATR up on your chart.
I'm pulling it right now. Was
Perfect.
it EV? No, ENVA. ATR is 94 cents. So I mean, you can't expect too much out of it.
Right. Yeah. So this might even be better as a swing for the week. I don't know.
Right.
Trying to catch some of that magnitude, or even on the monthly, our goal would be potentially up to 28. What's the top of the wick on that candle?
29.34.
29.34.
Well, something like this would have monthly options. So if you take a monthly, this month it would be the 18th expiry, but the January would be around the 18th also. So if you took, you know, you have to look at the chain and see what has the volume in it. But if you took this 2 weeks out, meaning December 18th or January's options, let's see, what is this, ENVA? Yeah, they're monthly. So the 15th would be the next month, and they're kind of low volume.
That's what I would think.
There's actually no volume in them.
Yeah, that would be a comment. I wouldn't even take them monthly, probably.
Yeah, yeah, I wouldn't touch those.
All right, cool. So we said entry over
you at least want to start over yesterday's high, 22.71.
22.71.
Yeah.
And then magnitude.
Yeah, I would say if I mean it's a smaller range play, so if I make this larger, you can see. Yeah, I would definitely enter over here, maybe add if this breaks, and then you're looking to get it up to here. 22.89.
Yeah, and this would be, again, if I were going to take this, I'd almost be looking for that longer term monthly type of play. I really would, because that's where and so the top of that's 25.18 would be your initial, and then all the way up to that wick would
up
be
to here. Yeah, 20. Is that 29.30 roughly?
29.30. All right. Then we've got FGEN.
FGEN. That's the 30. Got good magnitude, 3 on the week. Try going down, came back. Inside month currently.
Inside and up, yeah.
Yep.
Definitely some good magnitude there. 5%. Look at the daily. It almost looks similar to the last chart, the NVDA. What do the options look like?
Do I have it written wrong? It says it has no options.
F.
Never mind. I'm stupid. It's time for coffee again.
Right. I know.
Yeah, they're monthlies. So we got December and January. Not
too
decent.
much volume, but on those, yeah, you really need 100 or more on the volume for it to be. That's what my role is.
Yeah.
I don't know if you have rules on that, but for it to be liquid enough to get out with a decent fill and not getting screwed, because a lot of these more thinly traded stocks, if the options are really thin, those market makers are going to stick it to you as spreads on the way out. So this is what I'd probably, it's not too expensive. So I personally would probably play the comment on this one.
Yeah.
How about PTON?
Oh, Peloton. Or is it Rob that calls it the overpriced coat hanger?
Yes.
I love that.
I love that too. It's so funny. All right, so our inside and up on the monthly. And I found this on the monthly, when you've got that kind of spinning top candle, spinning top doji, where the body of the candle is in the middle of long wicks, that tends to be one of those equilibrium pauses before something goes higher.
Right.
At least that's what I've noticed. And then you've got this nice setup with the one that it wasn't 2 down, but it actually went up, even though it's red, right?
Right. It closed red, but it definitely tried to come back.
Yeah, so that looks like that could be a real nice setup tomorrow over 115.70.
Yes.
And target would be, wow, you got that you're not too far away from that gap too. And the ATR on Peloton's pretty big, isn't it? Or
yeah, about 6.7, 6.8.
Yeah, that's not bad at all. So go back to those charts again real quick. And we've got, so your initial magnitude would be up to the wick of that 3 candle, right, on the daily.
Yeah,
that one right there. Yeah. Draw your broadening formation so everyone can see maybe.
Yeah. And then down here, yeah, right there. Really steep on the bottom, but go away.
Yeah, and a lot of times when I draw them, sometimes I cut the wicks off the bottom because I look at it and like, gosh, that's so steep. There's no way it's probably gonna do that.
Yeah, that's a good point. So you probably want to take it to here and then to the bottom.
Yeah, that's probably what I would do, something like that.
Yeah.
So it's looking like if it's strong, it might even, what What level would that be tomorrow where those crosshairs meet your broadening formation? That's 118.97.
Yeah, 119 you figure, and it's also
119.
it's also these highs here. So, you know,
Yeah,
level traders will probably have this marked, so that's something to keep in mind.
right. So yeah, that looks like a decent trade tomorrow over 115.70, I think it was.
The high here, yeah, is 115.70.
We've also got NAV.
Navistar. Yeah, agree on every time frame. Actually, yeah.
That's pretty nice hammer candle there.
And I have these 3 inside days in a row.
Yeah, that thing could be ready to really go.
No, I'm putting this on my list. I like this Navistar.
Yeah, I like that too. And your entry is over.
What's that high there? 44.19.
44.19.
And then yeah, you have the potential to take all these guys out.
Yep.
No, that's actually not a big range. It looked like a much bigger
No,
range.
it did.
Yeah.
So go on the monthly ones. Is there quite a bit of range back to the upside there if you look left?
Well, yeah, you have, what's this? There's red candles 45.30 and then 46.90.
And
So
this
you
is
have
another one that would be more of a common stock play.
most likely.
Yeah.
Yeah, common.
And even looking at the 30, it is funny how that looks like it's so much more range. It's not, it's only a few cents. But scroll out on the monthly again one more time, man. How much further back is there a lot of range higher? There is quite a bit. So at one point it was up, what, 70, 80?
At one point, yeah, this is way back though, like before the 08 crash, it was
Yeah.
right up there.
So on this monthly, if it jumps over that kind of resistance level at, come down a little bit. What is the wick of that candle? It was like 40, yeah, 40.
Yeah, this month here was the high is 45.25.
It looks like if you get over that, I mean, it's got range and there's a lot of month left. I mean, that thing could continue on quite a bit higher.
Yeah, no, if it gets over this, it's definitely got range to here, which is 47.73.
And then beyond that, for the bigger move, if you look left, where are we at?
Yeah.
Then those are some pretty big.
Yeah.
So for me personally, if I was going to play this, I'd probably be looking for a trade on the month, because I don't know that a couple bucks or what have you is going to be all that great. But 30 cents if you're playing a large number of common is going to give you a nice amount of money,
Right.
But that actually, to me, has a fairly nice monthly to start taking out some magnitude looking left. So let's just give like a few targets for people if anyone's interested in playing that. Scroll back in again, and so our first.
Yeah, right. So let me just make it. There we go. So this will be the first here, 45.30.
45.30.
A market 45.25.
Okay, and then
45.25, and then we have this wick here on the monthly, which is 47.73.
And then even further, where would we be?
And then even further, you got the high of this candle, which is the month, so 52.27. And then I'm just taking the candle month highs, 52.27, 58.40, and then 66, and then 71.50.
All right. And what'd you say the ATR was on this guy?
$0.21.
21 cents. Okay.
Yeah.
So really, to get some juice out of this, unless you have a larger size account, you'd probably be looking for that longer term swing, because it's so high up on the month, one up. And there is some significant range from the past. And again, guys, when you're looking at these trades, you want to look left for where your targets are. That's how we all get them. And then one more here, TMO. Thermo Fisher. And that, I mean, these all look very, very similar.
Yeah.
So we're 1 and up on the month with range up to, wow.
Yeah.
And this one, I don't know how the options are on it. It's probably a higher price for common than I like to play. When I play common, I'm gonna do.
Yeah, at the money, $7 for December. They are their monthlies also.
What do the spreads look like?
Yeah, it's too spready for my taste. 710 by $8.
Gotcha. Yeah.
I mean, there is some volume. No, that's open interest. That's my fault. Yeah, the volume's in the 500. In the whole numbers, you have the volume. Otherwise, it's kind of low volume.
Yeah. All right, then we've got FGEN.
We just did that one.
Oh, you know what? Someone asked about that twice. Sorry.
Yep.
I was trying to read through and take notes at the same time. Okay, so. Okay, and then I've got BA on my list. If there's any other stocks, guys, go ahead and type them in.
Okay, inside here, magnitude is here.
Monthly, we still got a lot of month left. We got mother bar issues, but with a lot of month left, it very well. Boeing can move when it wants to. It really can. The options are decent on it too. They can be spready, so you got to be a little careful, but it can really move. And you're right on the precipice of that gap. I don't know how much the gap is there, but
yeah, there's this gap here, and you know you're gonna have stops here for people that went short. Here you're gonna have stops here and here for sure, but for longer term people. How big is that gap? 247.44 down to it's about a 6-point gap on the weekly.
yeah, it's not bad. Boy, I like what is the over that one candle to the upside? So your trade would be.
Yeah, over this one candle, which would be.
What's that level?
238.18.
So Boeing over 238.18, and what would our targets be?
What's this high here? Initially would be 242.
That's a decent trade with options.
And then the gap.
Yeah, and then the gap. So that looks good, I think.
Yeah, I do like this one.
I do too. I like Boeing. Boeing's going to be a watch for me tomorrow. I've also got BYND. BYND. And the reason I was looking at BYND, Rob talks about this a lot, the hammer down, hammer up being almost inside daylight in that it's kind of a sideways consolidation, right?
Right. So just, given the continuity, you want to go look for a downside trade.
A downside trade on it. So below
137.90.
137.90. $37.90, and our target is 134 initially.
Yeah, I'm going 134.60 from the weekly.
And BYND's got pretty big range on it too, doesn't it?
BYND's got a good range. Yeah, it's like 6 or 7, I thought. BYND. Yeah, 6, 7, 8. 6.78.
6.78, okay. So it could even go, let's see, go back to the thing real quick again. So 134.63. Where would be our next target? What's the if we look left here?
I know Rob doesn't like moving averages, but I like the 200 right here. We have 127.74.
And would that be more of a weekly target then? Because the ATR is what, 6, did you say?
ATR is 6, so this would be more of a swing target. Like, you know, if you
More
want
of
to
a
hold it
swing
for
target.
yeah.
Okay.
That's really your next level that I see before. If I'm following my cursor, you come to this first, and then you come to this one candle on the weekly. So this,
Gotcha.
you can come here first, and not to say that it can't slice through and go right to this low, but I'd be watching this first, and then this low here, which is 121.53, if it got down that far.
Okay, Microsoft. Can we look at the 4-hour chart on the 30-minute instead? Yeah, we could look at the 4-hour. See what that looks like. And that looks like one again that, you know, it's just flagging back to on the 4-hour.
Right.
Flagging back to the trend line for a continuation up.
Mm-hmm.
And we've got daily, weekly, quarterly, yearly up, month it's down, but you know, we're inside, headed up, you know, doji, but our inside down, but it's just a little doji. So
214.51 would make the month green.
What is it?
214.51 is the open for this month. That would make it green.
214.51. So over 214.51.
Which, if you follow my cursor, let's see, 214.51. It's just above higher day from Friday.
Gotcha. And then our magnitude there, that could be another decent one with room to move up the rest of the month, obviously, depending on what Qs do and so forth tomorrow at the open. So if we're looking at the monthly, what's the wick on that guy?
Yeah, this one here is 228.12.
That's what you said earlier. Okay.
Yeah, 228.12.
12.
And then 232.86 above that.
Alrighty, and then I got a few more. Let me jot it down. 1 second. Apple, let's take a look at Apple. Apple's one that almost everyone can trade too.
Yeah, this is one I trade almost I watch almost every day.
Yeah.
These lines.
Yeah, it's Apple looks pretty to me. I mean, we're red on the day, but weekly, monthly, quarterly, and then you look at that monthly setup, a 2-2 up.
That's nice.
There's some good magnitude on that too, and there's a lot of month left. The two things, guys, when you're getting into trades that you want to be really cognizant of is what's the magnitude? In other words, where's my target? And you always look left for that. I know, once again, people that just started trading, it's harder. For those that have been trading a while, we know that. But if you're just starting, you want to look left and say, is there enough magnitude? And then the other thing is time, which Ann talked about earlier. Is there enough time for us to get to that type of magnitude to make the trade worth risking my capital for? So on the monthly, I think Apple looks beautiful. And we've had a little bit of corrective activity here. So it's not, you know, last week when you looked at it and it had 6 candles green, that wasn't a good time to get in. You want to wait for the triangle day out, and we've had that potentially. So over 122.86.
Yep, you got magnitude to 123.78. and then 125.39, which I will add in my little
123.78, right?
yeah, that's the first one, and then 125.39, which I actually have marked as an area of strong supply on my charts, on my profile
Okay.
charts. So don't be surprised if this area, slaps Apple down a little
Steps
bit.
a little bit, okay.
Yeah.
And then on the month, I mean, what our target would be all the way back up to the wick on that red candle.
Yep, 138.
Okay. I've also got Home Depot.
Yeah, it was a beauty on Friday.
Yeah, it was. And it's busted out of the broadening formation.
Yep.
The only thing that gives me a little pause is if you look at the daily, you've got 4 red candles in a row. So that could definitely be one that you wait. I mean, again, this is all dependent on what happens tomorrow, but I'm more comfortable after 4 days in a row to wait for a triangle day out.
You got a very minor triangle right here. It's almost flat, but it's a very minor angle.
Yeah. I mean, if it breaks below that, you've got a lot of room. I mean,
you've got room, yeah.
Pivot machine gun once again, guys, on the monthly here and
Yep.
on the weekly. I mean, that's a nice pivot machine gun.
Mm-hmm.
Wow. Yeah, what are your thoughts on something that's been up, or I'm sorry, down 4 days in a row? That's the only thing.
It's could go either way. I mean, like I said, we have this triangle forming, and I also have this level marked here, but I'm thinking like a level trader, they're going to be looking for bounces off this level here, which is an area of support.
Yes.
So
Yes.
question is the selling going to be strong enough to overtake the buyers that try to hop in here? That's the only thing I've been thinking about.
Yeah. I think it's got great potential on the month, but I'd be careful on the entry. I don't know that tomorrow's going to be the day. Personally, I'd wait for that TTO.
What I would want to see is this clearly under 262.03, and then
262.03.
do something like come under, come back up, test it, then fail. That would get me in.
Yep.
Then I see this 200 happening.
Agreed. Yeah. And then you got some nice room to pivot machine gun there.
Right. Then all these guys are in danger.
Yep. I agree. How about Netflix?
Oh, 3-1 on that's the 4 hour. DLE is 2 every time frame screen.
There's a lot of month left with a lot of room to the upside too.
Yeah, there's a lot. Yeah.
So an entry would be,
if we're looking for the 2-2,
back to the upside. Yeah.
yeah, you'd want to get above 504.59. Yeah, 504 should get you at least to these highs, 510.
And then if we're looking to kind of hold it and look, it's inside on the 4 hour. So you could even do an entry. And what's the top of that red candle?
Yep, right there. That is 533.
That the wick on that little red guy is?
Yeah, right here. This level, it's 533.
533. Okay, perfect.
Yeah, I kind of like that entry.
Yeah. Yeah, one of the things I do a lot of times, if it's not inside on the day, I'll look and see if it's inside on a higher time frame. So the 4 hour, 2 hour, hour, sometimes down to the 30-minute even.
Yeah, we got that going on. So yeah, I mean, there's definitely possibility up to here.
I agree. I like that. Thanks, Chris, for that. Trying to think what else. IBM. Rob mentioned that in the weekend vid.
That was a nice 2-2 on Friday. Full time frame to. Yeah, we're just 2ing on it. We're 2ing up.
Yeah, 2 and up. That was an awfully big candle on Friday, but what's the ATR on? I never look at IBM. What's the? I like Microsoft better than IBM, I think.
Yeah, 250.
250. On the monthly, there's definitely room on that thing to go. What's the wick on the red candle there? 136.24-ish.
This here is 135.50.
135.50. All right, I think that's a good number. Any other charts, guys? If not, then certainly we can open up to questions. I know this is going on a while. We want to wrap up by 6 o'clock here, but hopefully this will help you with your prep for the week too, so you don't feel like you're trying to do all this work on your own.
This is one I saw the other day. It was BJ's
Oh,
wholesale. Yeah, if you look at this daily, this is what caught my eye. Was
oh yeah, oh yeah.
Look at this, and now we have a hammer.
Yeah, I like that.
This is that level there, the 38.70, Friday's high.
Yeah, that could be the beginning of something here. We're green on the year, first green day, obviously week, month, quarter down, but
yeah, this is one of those
try. Yeah.
Yep, and this is one of those examples where I would take like a 45 call and just see what happens.
Yeah.
But
yeah,
tomorrow I'll trade maybe the 40s.
Gotcha. So your entry on that and over 38.70?
Over 38.70, yeah.
That's a beautiful pivot machine gun back to the upside.
That's what I'm hoping for. Even halfway up would be a beautiful play.
Oh yeah, it's gorgeous. Alrighty. Any other charts, guys? Questions? Anything else? Go ahead and type it in chat. What tool do you use for volume profile POC and Thinkorswim?
I can show that. Yeah, Thinkorswim. Let me put this on a intraday chart. If you go to your studies and you type in volume, actually I think profile would get it. Yeah. If you type in profile, you go to where it says volume profile and you add it. And then the way it is out of the box. Why don't I see it? It adds it here on the left. So there's your profile. Then you can go in and change those settings. I like mine on the left side, not the right. So on expansion means over here in this area. So you change that to no. And it puts it on this side. It's kind of off the chart, but now it's on the left. And then you can change the settings to say, do you want it for this entire chart? Do you want it for one day? However you want to set it up. So right now it's set up for the entire chart, which is a 5-day, 5-minute chart. But you can go in and tell it that you only want it for the day. So under time per profile, you change it to day. You can have it for whatever time frame you want there that they offer. So day, and then apply. Now it puts one on each day.
Nice.
And then this red line, you can change the colors, in the settings, but that red line there is your point of control.
Nice. So looking at that chart just with point of control, I guess it'll be interesting to see where it opens tomorrow and what happens, but that's a beautiful example of how the price just floated up into that kind of void, right? And
just combining technicals with the volume. I just saw this just a second. If I draw this line backwards to here, you have this level, which level trades are going to have marked, and then you have this also fills this void. So a pullback to here is not out of the question, and then it can probably continue its leg up if it's going to do that.
Nice. Other questions, guys? It does look like the C. Somebody typed in chat. It does. It looks like a big bowl almost, you know?
Yeah, let me go to. Yeah, there's no good example really here, but it seeks uniformity. The profiles. It wants to be symmetric. You know, like this one here is a decent example. You see how it's kind of more symmetric.
Yes.
That's what it seeks to attain. So when we talk about like the C shape, you know, even though it's not happening on the same day, if you imagine the 2 days combined to 1 day, it's completing the profile. It's filling it in, but it's over 2 days instead of 1. That's the whole concept. It's a little abstract, but that's how it's viewed.
No, but you can see it. Yeah, no, it makes some sense. I think it's a powerful tool. Other questions, guys? On strat stuff, on stocks we've discussed, on volume profile, on anything? Or is everybody just information overload at this point? Give it just a sec, but if not, we'll wrap it up. And I really appreciate you doing this and talking. My goal with this, guys, is to have a different trader kind of go through their way of looking at things each week. So next week, we're going to have Kevin Harris talking, and he's going to go through how he looks at charts, the way he trades, because my style isn't necessarily going to be everyone's. Okay, you can certainly emulate what I do and it may work for you, and that's fantastic, but our goal here is to get everybody trading successfully. So there's going to be bits and ways that the people in the room trade that are more relatable to other traders, and it's all about each trader finding what works for them and executing. The only way to do that is to have exposure to lots of different ideas. One person said, do you use volume profile per session? What VP would you use when swinging?
I don't swing, so I would not be the person to ask. Let me pull up on a daily and see if I can maybe come up with an answer. That doesn't work. Let's try it. 5-day 30. You would probably want to set it to like a longer term, like 30-minute or 1 hour or 4-hour chart, and then set the profile to chart instead of day. Put it for the entire chart. That way, it gives you levels for that entire time period, so you can see this high volume node, how price kind of rotated around until it broke away from it, right here.
Mm-hmm.
Which is the same concept I was going over before with this is an area of balance, and then it got moved, price got moved away from balance, which is your initiative trade, which is kind of like the same idea with the broadening formation. You can see here, this broadened here and this broadened down here, and then we had the move. But the way you would use these high volume nodes, you would use these high volume nodes as areas of support or resistance, and then here's your point of control right down here. So you can actually see where price launched right off the point of control.
Oh yeah. So in other words, yeah, you look at it on a longer time frame. So on the daily, I for TradingView, the one that they have, I don't see that it works on the weekly. I could be wrong, but it doesn't show up on my weekly chart.
Yeah, and then these areas, these areas of no volume or low volume, price will usually just rip through it.
Okay.
Like it did here, but you just think of
nothing going on. Yeah, look at that void. Wow, that's so clear.
If you just think of a void like water, and think of this as molasses, it's going to have a hard time ripping through this than it will this.
It makes perfect sense. The rectangle, big money. All right, guys. Well, I think since it doesn't look like there's any more questions, thanks for tuning in. Our other goal is to give you some ideas for the week by, some people are doing scans. I got a couple ideas from the weekend video. So to give you some things to look at so you don't feel like you're walking into Monday morning blind. I know that's an awful lot of information. This is going to be recorded and I'm going to post it to YouTube. So you can always jump on and fast forward to the stock section if you want to kind of say, hey, what was it that we talked about, or.
And then if you want to include my contact, if you have questions for the profile, that's no problem.
Yeah, absolutely, absolutely.
Yeah.
And yeah, I'll make sure that I post all your stuff in your Twitter handle,
Okay.
on my Twitter, so that people can just go right to you from there.
Mm-hmm.
And I think that wraps it up. But thanks again, Aunt. Thanks everyone for coming.
My
And
pleasure.
we're just getting started on this, guys. So thanks for hanging in there with us. It's our first one, so they'll get better and better as time goes on. But tune in next week for Kevin Harris. You're welcome, guys.
All right. Thank you, guys.
Have a great night. Bye now.